Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com.
Welcome back to Golden Rule Radio. It's nice to be back in the studio after a couple weeks of being gone, Miles.
Nice to have you back, Robert. And the best part about today is Tori isn't here, which means I can be as pessimistic as I want to be.
And we might not have to talk about many fundamentals.
Yeah, but I might not get to be pessimistic this week.
That's true.
That's the problem with being a gold broker in a bull market who likes to be a pessimist.
Yeah.
Is we've had, I think the word of the week across the board this week is breakout, because
Yes,
we've
it
had quite a
is.
few. From currency breakouts in the euro to gold breakouts, silver is pushing that direction. Everything's platinum had an exceptional single-day breakout. That looks like it's going to take it higher. So we definitely want to dive into the charts today, but everything is looking quite optimistic.
For the metals, that is.
For
Maybe
the
not if you
metals,
live in
that is.
Canada or drive a truck or live in the Ukraine or all these other things that are going on politically and fundamentally.
Yeah, it's almost like those are correlated. I know Rob and I had a conversation while you were gone here a couple weeks ago just talking about what does gold do in a rising interest rate environment. And I think the solution we came to doesn't matter. Gold does well in times of uncertainty. If interest rates are rising because of uncertainty, gold does well. If interest rates are falling because of uncertainty, gold does well. And I think that's what's really taking place here is we're seeing uncertainty politically, economically, both here domestically in the U.S. as well as our next door neighbor to the north, Canada, and some of the issues percolating. And then obviously, as you mentioned, the Ukraine is something that I think all eyes are on. And let's not forget that we still have a situation taking place in the Middle East between Israel and Palestine. Oh, and then there's the whole China thing. China and Hong Kong and Taiwan, and the list goes on and on. So it is of no surprise that we are seeing breakout moves in a number of the precious metals, both on the charts, as well as some pretty lopsided trading taking place on the February 8th COT report, and looking forward to see if that held. So before we ramble any longer, shall we dive into the charts?
Absolutely. We've been talking about buying gold here for the last number of months because of what the chart's been telling us. For 11 months now, gold has held the low that it put in March, early March of last year, and it's had 5 higher lows since then. And this consolidation here, this wedge pattern that it's formed in the last few days did poke its head slightly above that previous high. And gold looks good, I would say. Looks like it could easily have a fairly explosive move after this consolidation for 11 months.
Yeah, this wedge pattern has been quite unique going back to the ultimate high we put back in July, August of 2020, up just shy of 2100, in that we've continued to have these repeating breakouts above the descending top end of the triangle, and we've continued to have to push out the top end of that triangle. And I've brought this up multiple times over the last couple shows. What we haven't had is we haven't had a significant price higher high, which we did technically have if you look at the intraday charts here recently. The recent high did poke its nose above the November highs from last year. Now, it didn't close above that high, and that's what I think you and I are both looking for. But we're now sitting above this descending triangle and hoping we're going to see a significant higher high, probably pushing us into the low 1900s. If that happens, I may actually get optimistic, which is a rare occurrence for me.
I think you used the word bullish earlier this week, but just maybe not on the show.
Yeah, we're not going to talk about that. Don't give me away.
Yeah, but gold's obviously acting strongly in the face of all the craziness going on in the world, and it's pushed slightly above that previous high, the next previous high being just above 1900. If gold clears that, Miles, do you wait for a pullback? There have been people talking about gold pulling back from here. I just don't see it. And even if it does, maybe you save $100, $150 on a pullback move if we were to see that. And if we don't, and it just keeps rolling up, the upside target is a lot higher than the downside target. Would you agree?
Oh, I definitely agree. This long-term trading range that we've been looking at since we had the pretty explosive movement in gold up that ended up culminating during the height of the 2020 COVID, first 6 months of COVID in 2020, up to around 2100 and then coming all the way back down to 1680. If you look at the long-term charts, and we've brought this up before, it had a very shallow reversal. To move that much since 2015 up until 2020 and to only come down to this 382 fib level is an incredibly shallow reversal back down. Now, the fact that it's taken 16, 18 months from top to bottom to where we are today to finally have another breakout isn't a problem. Instead of having a massive reversal in a short period of time, what we've had is this extended trading period that's kind of shaken out all of the concerns of both bulls and bears in this type of trading market. So if we're going to see that in a shorter term fashion, I agree with you. I'd like to see gold slowly trickle up here to around 1950, maybe get above, as you mentioned, the last higher high, which was back in May, June of last year. Slowly trickle up to 1950, slowly trickle back down, and put its boot firmly on top of that descending top end of the triangle that we've been wedged inside of for the last 18 months. That's going to tell me we are getting ready to take those next two big steps forward.
Yeah, so if you've been sitting on the sidelines as we've been telling you to buy gold here in this range, I think once gold leaves this range, like what you're talking about, getting above that next previous high and then pulling back and basically saying that the previous ceiling becomes the previous floor, if we see that, which I think we will, then you don't want to wait. You do not want to wait for any type of movement down. You should be buying on weakness here. If we turn to silver, silver has been lagging gold, hasn't clearly broken above the previous high. Gut feeling is you could wake up in the morning one of these days here shortly, and silver has clearly moved above that previous high and have an explosive move up into the mid-20s. I think that scenario could easily play out. And if silver does that, it's going to confirm this momentum move bullish with gold, and then you're going to be off to the races higher.
Sure. Well, I mean, silver has always been gold adjacent. Gold is not necessarily silver adjacent, but silver is definitely gold adjacent. We absolutely saw this back in 2008. You and I remember gold had a slow run up from around 650 up to around 1900. It took 2 years for that to happen. Silver did the same thing. In fact, silver did more percentage-wise than gold did, and it did it all in 9 months. Silver takes a while to get rolling. I think what ends up happening here is you have your average investor who comes into a market move halfway through, and they're looking around going, gold is what price? What's cheaper? Maybe I'll look at silver. So, and we're seeing the exact same thing now as gold is starting to hint towards breakout. Gold has moved now and come down and used the 200-day moving average a number of times as a stepping stone. So while we spent about a year under the 200-day moving average, it looks like we're now moving above it. Silver hasn't moved above it yet. It's still sitting below. Silver is also, as you mentioned, still sitting in the middle of that wedge where gold has already pushed above it. So I completely agree with you. I think that silver is going to lag behind gold, but as we talk about things like ratios, when silver decides to play catch up, when the market looks at the price of gold as something that has to be a part of the average person's portfolio and realizes that it's now $3,000, $4,000, $5,000, whatever the number is, they're going to look for a cheaper alternative, and that's when silver plays catch up. Boy, wouldn't it be nice to be in that position today before all that happens.
Yeah, and we always want to compare what's happening in one of these metals versus the other one. And if you look at the copper price, copper looks like it maybe is ready to move higher as well. You look at the platinum price, platinum's at almost a 3 or 4 month new high today, pushing above where it's been trading. So it does look like some of these other metals are indicating the metals market as a whole is ready to move higher. Gold, platinum, copper. And then silver's been lagging. Silver's going to easily play catch up if that gets legs. But platinum, I like the look of what platinum's done on the chart. Breaking out a little bit today. Probably needs to get above 1100 being another previous high, get up to 1150, maybe 1200 before we really see the major larger term change in direction. But it does look supported and is starting to move higher, getting up towards those breakout levels.
Yeah, it looks to me like platinum is actually leading silver.
Right. That's exactly why I wanted to reference copper, copper, platinum. You could probably look at a few other metals and you could see that same type of pattern happening. And silver is probably due to play some catch up here and probably outperform.
Right. And you could argue, or at least I would argue, gold is making a reactionary move on the political economic, whereas things like platinum, copper, gasoline, stuff like that, obviously reacting to the inflationary expectation following some of the Fed announcements we've seen. Because we've heard higher interest rates and we've heard a hope for lower inflation, but the interest rates are coming first. So we're looking at higher interest rates and increased inflation at the same time, at least for a period of time until the Fed decides to begin lowering the balance sheet, which may or may not happen, but it is coming second. So you're starting to see these commodity prices begin to increase, and it's starting to take its toll on the equities market.
Speaking of the equities market,
I thought you'd like the segue.
I did. I just pulled up the S&P 500 chart, noticed the technical trading here from the very top of the S&P 500 down to that low that it had late January. It's done with its 618 correction, back up to right around 4,600. You do that fib retracement on the chart, Miles, and you're going to see 4,600 right there. It hit it. So you could reason to say it has bottomed there with that sell-off, but not actually bottomed, because that retracement back up to 618, it's not pushed through it. It just stopped right there at the 618, and now it's trending lower. Boy, if you see a violation of the previous low on the S&P and the other equity markets, watch out below. It could get violent to the downside from here.
And you're seeing the same movement in the more aggressive market, the NASDAQ, and the less aggressive market, the Dow. So the equities markets all look like they're beginning to turn over. And since I brought it up on previous charts, let's throw the moving average, the long-term 200-day moving average on the Dow. Look at that. It looks like we're starting to break below it, something we haven't seen in years. So the Dow is starting to show more weakening. So here's my prediction going forward. I don't see the Dow making another higher high anywhere in the near future. In fact, I'll go ahead and say this. I think we're looking at the Dow sub 31,000 at least on this move down when it's all said and done. Now, what the Fed decides to do in response to that, maybe this is 6 or 9 months from now. They've tried to raise interest rates. They see the Dow continue to fall. People are beginning to panic. All they have to do is lower those interest rates right back down. So is the raising of interest rates with the expectation of continuing that going forward for a number of years, or are they threatening to raise interest rates to see how the market responds and to give them a little bit of wiggle room so that they can lower them again and turn the money printing spigots on? I'm not sure. We'll see how that plays out going forward.
Yeah, well, the technical damage that's been done to the equities markets isn't immediately fixed back into a bullish trend on the technicals. I'd say the markets have to go to a new high to resume that buy the dip mentality of, yeah, it's just going to keep going up. You just buy when it pulls back. The technical damage that's been done is going to take some time and some significant money moving into the equities market to drive it to a new high to keep it in a bullish pattern. So it's a quite precarious situation, I think, this year for the equities market.
And finally, all of that hinges around the currencies, where the majority of money is sitting and where everything flows back into eventually. The dollar has remained surprisingly strong in anticipation of Fed changes going forward, or let me rephrase that, the dollar index. The DXY has remained relatively strong, still sits in bullish territory, at least short term, since we hit bottom back in end of 2020, beginning of 21. We have not put in a significant lower low. We do have some RSI divergence between the two most recent highs, And something I pointed out on the dollar a couple weeks ago, looking back at kind of this last right shoulder, going back to May, June of 2020, we've failed to push above that and declines back down. So we're playing around with some fib levels in the dollar index. But on the flip side of that, you go to the second biggest currency out there, the euro. And the euro has had a significant breakout and done exactly what we've been talking about we want to see gold do. The euro broke out of a more than 10-year declining pattern against the dollar, took a big jump up, has come back down, and looks like it has recently put that foot firmly on the previous old high. So if we see the euro begin to climb from here, that is the exact type of breakout pattern I'm looking for with the compression we've seen in gold and eventually silver and platinum to follow. Breakout, new high, come back down and confirm it with the type of drop that you're talking about, Robert. That's when you look at getting into those positions.
And to wrap that up is a positive euro puts downward pressure on the dollar, which puts upward pressure on the price of gold.
For those of us here in the United States, absolutely.
Right. That does it this week for Golden Roll Radio. Thank you for listening. You can subscribe by hitting the button below. Follow us on Facebook, McIlvaney Financial, Twitter, ICA Gold, our website, McIlvaney.com, and you can always give us a call. It's 800-525-9556. Thanks for listening. Have a great week.